Hello, and welcome to another update video about Bitcoin. We start on the daily time frame. Yeah, we see that overall the expectations haven't changed. We're still holding above support. We are still in a bullish market. What you see there as an orange box is the nearest support on the daily chart I can offer. It's the support range between 50,745 and 61,818. That's purely support, not a target, but in most cases these support regions are at least touched or reached by the price in the correction. Now in corrections, targets are, support is not a target. So you can have Fibonacci extensions of the internals of the wave structure. They can act as targets, but it's more like, as long as we're above support or within support, we continue to focus on higher. The lower the price drops in the support region, the better the reward to risk ratio. On Sunday in our member live stream, we covered how to trade with Elliott Wave, how to use the boxes and zones. We covered, position size management, risk management, everything in one member live stream. So if you're interested in finding out more, because sometimes I get questions about how to trade with Elliott Wave, then check out our membership, especially the gold membership, because there you get additional updates as well. You might hear still the background noise. I mentioned it yesterday. There I've got some people actually do some work here, so we'll have some background noise here and there, not too much hopefully. So anyway, just mentioning that because I get many questions, well, not many questions, you guys are already very educated, you know how to understand the analysis, but because we get new viewers every day, so I think it's worth putting the time in at least to understand how to trade with Elliott Waves. Not everybody needs to do it, Elliott Wave is not for everybody. But pullback trading is, I think, the method, using those support areas as pullback trades, or full pullback trades. It is the method that is suitable for most people, okay? Especially if you don't have a lot of time, you can just add your limit orders in these support areas, and this first one would already have been reached, right? So that the price actually reached that support zone. That was here the 23.6 Fibonacci retracement, and rallied off the support area. On the smaller time frames, we had one or two more support areas, which the price also respected and reversed from. There was one here and there was one here, but I took them off because we don't need them anymore, but I leave this one on because it could be that the price dips into the region again. And this is really the one that is relevant for the daily time frame. I would argue that's relevant for most people. And I'm not saying the price will come down to 50,750, absolutely not. I find that quite far away. But I would not rule out a drop into the region below the A wave low. So basically around about 60K down to 55K. So that would be the white count. And you see here the short-term bullish and the short-term bearish count. In the short-term bearish count, which is currently, I think, the one that offers a higher probability and should be favored, even if it's just for risk management purposes, it is this ABC structure. A wave down to the 20th of March low, where the price bottomed at around 61.5K. Then the B wave is possibly still unfolding, but it might have topped already. We're going to take a look at the structure on the smaller time frame. At least if the B wave has topped, we know that a C wave down should follow and send us into this support region. From there, we could then start a fifth wave rally. And in a more directly bullish scenario, the wave 4 already bottomed here, but this is not at the moment the most probable outcome, at least not with the info that I have in this, and that can change. Here we're dealing with an ending diagonal. Wave 4 already bottomed and we're already moving up higher. And in both scenarios, we should rally in a fifth wave into the 90K region, either directly, that would be the diagonal pattern, or from the support zone again. A dip into the support zone would offer the opportunity again to find a position in the support region for pullback traders. And for anybody who maybe took some profits or is planning to take some profits if we get another rally in wave B. So there would be an opportunity there. If it rallies straight away, fine. We are in a bullish market and the price already dipped into the support zone anyway. And ideally everybody's got their core portfolios or core positions. So it should be a win-win for most people. It's a bullish market. Pullbacks can be opportunities, but the pressure is still up. We're not in a bear market. And what else? How can we distinguish the two scenarios? Here on the daily time frame, very simple. The yellow count is valid as long as the wave 2 low is holding. So that's pure validity, you know. Invalidation point from an Elliott Wave point of view is this swing low, yellow wave 2 at 64.5k. Below that level, it can't be yellow anymore. Now let's take a look at the shorter time frame. This is the 1 hour time frame. Here you see the two scenarios. You see the larger B wave that could result in a C wave, yeah, to the downside. So A wave, as I said, bottomed on the 20th of March, then an ABC structure in wave B. Ideally, I'd like to see one more push higher, but it's getting challenged. Quite a sharp drop yesterday. Then a C wave down, and from here we can rally, or we rally straight away. Both counts bullish, with the difference that the white count offers the opportunity to find another entry point maybe, yeah? And the yellow count would be 1, 2, 3, 4, 5. Both bullish. Can't say that often enough, okay? And I have no evidence that a low is in though. So I have no evidence. So it's preferred that we get one more attempt maybe to enter a long position in the support zone. Well, you can always enter a long position. It's just that, you know, I'm talking about getting into this support zone, which might trigger a limit order for anybody who uses this lower support zone. But even in the very short term, I think, you know, if we talk about the white count, which is this B wave rally, I mean, one more high would look best. This looks so incomplete. It looks like, I mean, if we're really in a C wave of wave B, then the C wave should be a 5 wave move. And I can only count a 1, a 2, 3, 4, which is deep. Maybe another 5 to come. That would be ideal. That would look best. And this is something I'm going to follow and focus on as long as the price holds 67.9k. A break below 67.9k would indicate that, well, it's probably not the white count. Could still be yellow, so the diagonal, which ideally shouldn't break below 66.2k. Below that level, it's getting more and more likely that the white count is unfolding, and this would be confirmed with a break below 64.5k, which is the invalidation point for the yellow scenario. That's my update about Bitcoin. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.